Yo guys, welcome back to Stock Talk Insider. Today we will be talking about Honest, also known for its ticker HNST of Honest. I possess $1,000 position into the company. It's pretty low, pretty reasonable position if you look at the whole portfolio for such name as a position in the portfolio. I am planning on expanding the position because I do think that the price at this point is way too low for what it would actually be worth. I do believe that with the shown growth and shown revenue and earnings from last quarter, that this company should probably be around $6 to $7. But sooner in the video, later in the video, we'll be talking about a very based projection of what the stock price would be considering the PE ratio of the company, so of the stock, I mean of the company. So yeah, let's dive right into that. The Honest company was founded by Jessica Alba, focuses on eco-friendly, sustainable and non-toxic household, beauty and baby products. This brand has built incredible customers' loyalty, especially among young families and eco-conscious shoppers. Their commitment to transparency and product safety is a big competitive edge, especially as more consumers demand clean products. So let's start with a little bit about their Q2 2025 earnings. Before we do that, the stock went down to lows of $350. So going into its earnings, Honest reported revenue of $105 million, which is a solid increase of about 15% year over year. They achieved a net income of $3 million plus, marking consistent profitability and a big step forward compared to previous quarters. Their gross margin improved to 34%, reflecting better operational efficiency and product mix. What's really striking here is the market cap is only about $449 million, meaning the company is generating roughly 23% of its market cap in quarterly revenue alone. For many investors, that's a massive undervaluation compared to peers, signaling serious upside potential if Honest continues growing and improving its profits. Here are three big growth catalysts for Honest. So these are the big three for me. International expansion, it's really just going to start. So they're growing fast in Asia and Europe, where demand for clean baby and beauty products is booming, because especially Europe and Asia are very demanding on their products being clean and being very well treated. So yeah, that's one thing about the international expansion, with also e-commerce and omnichannel strength. A stronger direct to consumer platform combined with partnerships like Amazon, Walmart and Target means higher brand exposure and more revenue streams, which makes the name a lot more known. So product innovation is the third one. Honest continues to expand into high demand categories like skincare, personal care and wellness, so it's not only about diapers. Right now the market cap is still relatively small, around those $450 million, meaning there's plenty of room for the upsides if they maintain their current revenue growth and expand margins as planned. The stock could easily command as much higher valuation in the coming years, and with a PE ratio currently around 67, the market is already pricing in strong growth expectations, meaning if they deliver, the stock could fly. So I have 6 years of probable revenue, net income, EPS and price predictions. So we'll just do the price and the net income maybe. No, the revenue and price is the thing that I will be saying. So 2025, the revenue would be 500 million, sorry. And the price would normally be with the PE and then the 500 million, around 500 million revenue would be around 335. So that means that it's already a little bit overvalued, but we're not looking at today. We're looking at 2026, which means that the stock is undervalued, because for 2026 I have a price prediction of $5.36, which means a little upside until this, where this big consolidation was happening and then it went down. So around here is where I do believe that in 2026 it would be a nice price to revenue. Going to 2027, we have a revenue of 720 million. This comes to a stock price of 8. So then we go even higher to the highs of this year. Last year December we were at this level, so that's around 9 months ago. So then we're back at the levels of 9 months ago, but of course these are very normal price predictions. Of course, with the bull market or something like that, we can go much higher than that, but I do believe that at this point $3.35 for the stock at this point would be too low, but going into revenue and PE, it is overvalued. For next year, it can go up more around $2 probably, and then 2027 we would be at over $8, and then 2028 we would go from $8 to $11. With 860 million in revenue, and then 2029 would be a whole different year, because we would take our first $1 billion in revenue, which would mean that we normally, with the PE we have now, we would normally have around $15.5. So that's a pretty nice increase if you look at this from point we're at now, and going in one more year longer, then we're at $21.5 with a revenue of 1.2 billion. So this table shows our combination of revenue growth, rising profitability, and a high valuation multiple could lead to massive upside over the next 6 years. Even modest EPS increases are magnified when the PE ratio stays high. So there you have it, guys. Those are my thoughts on the company's expectations if you look at stock price and predictions on the revenue. If you want a more deep dive in where Honest stand with its newsletter, with its new news titles, and just its whole interrogation into a video of the company, then I can literally do that perfectly, and I will probably be doing that. But at this point, I just wanted to let you guys know what my price predictions were and what what probably would be the revenue of the coming years. So yeah, thanks for watching, and I see you guys later.